Well, hello. Thanks for those of you that are hopping on. We have a few other people hopping on here. Just want to run through a few housekeeping issues as you guys are coming online. There should be a button that says chat and a button that says Q&A. If you have any questions as we go through the material today, you can post that in the chat or the Q&A. But excited to have everybody online. I'll give just a few more minutes here as we sometimes teams can be a little bit tricky to hop on to. So I'll give a few more minutes here as people are hopping on. Drew, thanks for hopping on. Just from your side of test, can you see everything? See the presentation and
Again.
Perfect. I want to say the one thing about our other webinar platform that we were using had some nice little light elevator music we could kind of play in the background, but I'll have to figure out a way to turn that on in Teams whenever we want to do that. My team always gets on me because we, in our team meetings, always play some background music in our conversations as people think maybe some Jeopardy music or something like that. Well, we can get started here. Probably a few more folks hopping on as we get going, but thanks to those that are attending live. So we're going to jump in with year-end tips for direct primary care owners. We also work with folks in the cash pay medical space. So whether you're running a dental practice that's cash pay, a chiropractor practice that's cash pay, or mental health counseling, we've worked with folks kind of across the spectrum, but direct practices. And we are going to walk through pricing, planning, and financial readiness for 2026. Before the Christmas holidays hit, it's always helpful to take some time because once the holidays hit, everyone kind of goes on vacation mode. And then all of a sudden, the new year's here, tax season's here, a lot of questions are coming. So this is a great time over the next 2 weeks to be able to put into place some practices and habits to be able to have a really good 2026. So the first thing we're going to talk through is running your numbers with clarity and honesty. I think we have people on two different spectrums. So you might be the pessimist or you might be the optimist. And being able to actually run your numbers and look kind of down the middle of pessimism and optimism. I tend to be a pessimist when I run my financials for my company. And Drew, when he comes in, I show him my financials. He's the optimist. So he says, Nate, I think we'll do way better than what you're projecting. And I'm like, well, what I'm projecting is we're just going to continually lose money. There's no way this is going to work, right? So having true clarity and honesty when you run your financials would look like when you go into QuickBooks Online or Xero, wherever you're running your monthly financials, looking at this year and how you did. If you only did a partial year, saying, hey, am I going to add 10 more patients a month? Am I going to add 5 more patients a month? And that's where calculating true capacity comes in. Being able to determine how many patients you can realistically see per day and per week without burning out, because running a business is exhausting. If you guys have been stepping into direct primary care or you're on your way into direct primary care, the overwhelm of running a business at first can be a lot. If you've been running your practice year after year after year, maybe you're adding additional physicians and you're trying to calculate that number of how much can that new physician or that NP or that PA manage without us burning everybody out. Because the whole goal of what we're doing in direct primary care and what you guys are doing is we're trying to create a better work-life balance and be able to provide really good healthcare to your patients. So once we understand what true capacity looks like, and this is different depending on your ideal customer profile. If you've never taken the time to, get a blank sheet of paper and draw a little stick figure, right, and that represents your client, write down and say, who is that person? Is it an employee of a company? Is it somebody in their 60s? Is it somebody in their 30s? What's the social demographic, right? What's their socioeconomic status? Once you know what your ideal customer is, that's going to determine like how much of a touch point you have with them. So is it, every single um, patient takes an hour per week, well, your capacity is going to be a lot lower. But if, hey, these people only touch base once a year because, they're a healthy employee and this is part of their benefit plan, you might be able to see a lot more patients in that model. So once you understand what your ideal customer profile is, I think you also can then realistically see what your true capacity would be. So that helps you measure then, hey, if I hit 300 patients this year, I would probably say go a little bit above what your capacity is if you want to bring on that next provider. What we have seen as a pitfall when people bring on new employees is you are the known commodity. You, as the owner, that's who the patients are coming to see. And as soon as we go out and bring in a nurse practitioner or a PA, a medical assistant, any of those people that are in your building, we have seen a much slower ramp up for them. It's been harder to get members underneath of that person. They keep subscribing under the main doctor. So what the ideal situation from what we've seen is being able to go a little bit above your capacity, whether if your capacity is 300, being able to go to 400 or 450, and then bring on that additional person, because that will allow you to pass some of that work to them, whether it's the call work, whether it's the regular visits that you announce to your team that, hey, we have a new team member joining our company. So that's a great way to look at capacity. Another part about running your numbers with clarity and honesty is analyzing the current performance. So in your bookkeeping or accounting software, you're going to want to run a profit and loss statement, cash flow statement, and then we're going to look at some key financial metrics. So if you have your profit and loss statement, at the very top, you're going to have membership subscription income and any other way that you have cash come into the company. So as that money is coming into your company, you then should have some directly related costs. If you're selling prescriptions or supplements at your office, then you'll have a cost for those supplements and prescriptions. So that cost should be directly at the top in your cost of goods sold. Then what you'll have underneath of that is your gross margin. And so what we typically like to see for most practices, if they are selling any sort of product or service that has a cost, we want to see like 80% gross profit margins for direct primary care. Then depending on if you are in growth mode or if you're in maintenance mode, that's going to determine what your profit margin will be, like your net profit margin, which is after all your expenses, rent, utilities, insurance, taxes, payroll, all of those specific costs, which are your operating expenses. We want to see a net profit margin in the direct primary care space anywhere from 30%. Some go all the way up to 70%, especially if you're in like a micro clinic. Because micro clinics, the goal is really low overhead, being able to have your set amount of patients, and that's it, right? So depending on what your goals are, if you're in growth mode or if you're in that maintenance mode, is going to kind of determine where you'll be on that scale of 30 to 70%. So look at your profit and loss. I always tell people you should do this monthly. If you're not getting your profit and loss and your cash flow statement and your balance sheet on a monthly basis, then you need to talk to your accountant to make sure that they are sending those to you. If you're running your own financials, then make sure you're going in at least weekly to categorize your expenses and everything in QuickBooks to get this information. Then the last piece on running your numbers with clarity and honesty is forecasting for the year ahead. If you don't currently have you don't know where to start with a cash flow forecast, or you're a cash flow forecasting wizard, what we have, if you need any sort of resources, we have cash flow forecasting templates in Excel. We have a cash flow forecasting app that we vibe coded online that you can use. And it's just a place for you to think through next year, if I want to bring on another 100 patients or 50 patients, what is my average price per membership? So what am I going to bring in? And then where am I trying to spend that money? It's been very interesting. I've sat down with a lot of doctors recently and run through the cash flow scenario with them. They build it and then I review it with them. And it's when we get in there, we look at the bottom line and say, hey, when are we actually making money? And are we hitting enough of our cash flow margin to increase our take home pay? Building out that spreadsheet and running that practice is going to be really helpful for you to know if you're on the right track of what you had originally set out to do. So if you don't know where to start, you can send us a message and we can send you over some templates to do cash flow forecasting. Or if you're a cash flow wizard, looking at making sure you're running that cash flow forecast for next year. And one thing we see with people that already know how to do this is they'll set it and forget it, right? They finish the forecast and they never look at it again. It's like, that was a great exercise, but we need to get through January, February, March, look at it again, right? Get through a quarter and then look at it again to make sure you're following what you said you're going to do. Because we get in with conversations with people too often that they might have had a tool they were using and then it just kind of gets shoved to the corner and starts growing dust and mold. And then they're sitting here scrambling because they're out of cash, right? So make sure you're looking at the year ahead. And this is a great time to build out one of those cash flow forecasts. I'm going to go over 4 more slides here, and then I'm going to pass it to Drew, who's going to take over from there. But one of the biggest things that we talk about with our folks that we work with is a price increase necessary? And one thing I'll always say is if you aren't regularly increasing your prices, eventually you are going to significantly hinder your ability to continue to pay your bills. So I want to give you 3 kind of key factors to understand if you should have a price increase. So the first is there's going to be rising costs and you're trying to build a sustainable organization. I think when we talk about price increase, there's immediately this emotional reaction to, well, I don't want to cause financial burdens for my patients. We're trying to create a system. Or on the flip side of, I don't want people to think poorly about me because I'm charging too much or price gouging, right? I'm in the professional space and I charge for me, right? You guys are doctors, you charge for people to see you. And there is that real fear of not wanting to financially burden people. But we do want to know is like, if we want to continue to provide value to our patients, we have to create a sustainable business. So underpriced memberships are going to force you to see more patients to be able to meet your expectations and your bills. This always results in burnout. Your fees should really reflect the trust and the continuity and the peace of mind that you provide to those patients. You add real value to what you're doing. And so it's important to price yourself accordingly. Key factor number 2 is future investments. So being able to calculate the margin you need for your professional development, adding additional staff members, adding new technology. Many practices are going to add about $10 per month per member to create some financial cushion for themselves. A helpful metric when you're thinking about how much money should I set aside for emergencies, one of the metrics we use is for direct primary care clinics is about 10% of your annual revenue. If you don't know your revenue net yet, or your pre-revenue, like you haven't started your company, when you do that cash flow forecast, use that number, right? If you're going to hit $200,000 next year in total membership fee collections or $2 million next year, you'll set aside 10%. So either $20,000 or $200,000 is what your goal will be, and set aside 10% of your revenue every single month into a separate savings account so that you have some cushion for if a bunch of patients left. What we typically see is when you do a price increase, whether it be a 5 or 10% increase or a $10 increase, the turnover is very marginal, right? And Drew can probably speak to this as well, as we've walked clients through these price increases, but we typically see at max a 10% churn on our total member counts. So if we increase by 10%, we only churn out 5% of our revenue. You now have 5% more cash than you did previously. So if you're thinking, hey, I want to hire that next employee, being able to increase your fees to be able to pay for that new employee and give you some cushion is a great way to have that when you're thinking about price increase and building a sustainable business. The third key factor is regional price sensitivity. We have a pricing calculator, and I'm happy to share it with you, that just takes the census data from around the US, you plug in your zip code, and it will show you what the average annual household income is for a family of four. That helps you know, hey, just the average Joe Schmo in my area, this is how much their family makes in a family of four. That's going to give you a lot of understanding around, okay, am I charging too much? Am I charging too little? And most people spend like 10% of their annual household income, all the way up to 15% of their annual household income on healthcare costs. That includes health insurance. So if they're choosing to use direct primary care with a health share model, they could probably get it down to like 7% of their annual household income. So if you, as the owner, are able to go in and increase your price to be 5% of this average person in your community annual household income, those people, it's affordable. And if you say, hey, Nate, I really want to help with low income families, I want to help people who are, underprivileged. If you build a sustainable, healthy business, guess what? You can offer free memberships or subsidized memberships to those underprivileged people. And just like the YMCA has an application for people to get discounted memberships, you can do the same thing. Hey, in order to get a discount, we want to be able to help people. You could have an advertisement that we help people that are underprivileged, right? You could give them an application to say, can you please list out your sources of income and provide a tax return, right? Trust but verify. That allows you, if you're building a sustainable business, to give people the opportunity to still get access to great direct primary care without price gouging. And also your members that are paying full price, what a cool thing for them to be a part of, that their monthly membership is also helping other people get access to really high quality healthcare. So kind of the last summary around designing your pricing strategy, and something we'll have for you guys. We're working with our marketing team currently, but by being a part of this, we'll send this out as an email after the fact, but we're building some resources for you. It's going to be a letter that you could send to clients that just explains why you're doing a price increase. So if you're like, I don't know where to start in letting my patients know, we're going to have a template for you that you can use. And then we're going to also have like email templates as well that you could send out to announce the price increase. So I have a couple resources for you guys that you can implement this strategy here, even as we roll into January. So number one, set your timeline, right? Give some people some notice. So annual increases happen 30 to 60 days before implementation. January is ideal because patients expect changes, right? Open enrollment, they're used to health insurance changes at around this time of year. They're also used to inflation. So if you've been in practicing for multiple years and you've never done a price increase, I'm talking to you. You need to do a price increase. All right. Well, even if it's just $5 per membership. Step number two, choose the right structure. So decide on tier-based increases, or if you want to do a uniform adjustment. We have some people who offered early adopter memberships where they said, hey, we'll lock in your price for 3 years. But one thing I heard recently, I was part of a DPC launch boot camp. One of the doctors said something really good that I appreciated. He says, you keep them how you get them. So if you are a person who gets patients by giving discounts, they will continually want discounts, right? If you acquire your patients by having a high pricing value model, they'll continue to pay you as you have a high price value model. So remember that you keep them how you get them. So if you increase $5 to $6 per tier, and that can be paired with some clear explanations of, hey, we have rising costs just like everybody else does. We have employees. We're trying to continue to provide opportunity, and then test it and measure it. So consider introducing some premium tiers, or you could bundle some of your services. Like if you had something that was ancillary, you could add an additional, hey, if here's our standard price increase of $5. We're actually going to offer this additional tier, what's $25 or $30 more per month. You could increase your income with really having just like one additional thing. Maybe it's a discount on supplements that you wouldn't get in a standard tier. And then monitor patients and how they respond to this, right? If you've got Hint or Atlas or Elation or Serbo, one of your EMR systems that's managing your members, look and see as you're announcing this who's requesting to cancel, so you can have a good tab on what's changing and what's not. And then ultimately, know that you bring a lot of value to your community. And so when you bring value, it is reasonable for people to pay you for that value. And so we work with a lot of doctors who we work through this idea of, hey, let's make sure that you understand that you are a valuable person and you bring really good services. Because people, there's this imposter syndrome when you become a business owner, and I feel like it's not ever talked about, right? That it feels like you're just pulling stuff out of a hat. So make sure that you know that you bring value to your community. Jerome, to see, can you switch to where you're presenting to? I just clicked on the PowerPoint and click present in Teams. I think you could do that. And we'll pick up on slide 10. While he's pulling that up, one of the things that we'll talk through next, and this is what Drew's going to walk through, though, is our kind of executing a critical year end. What are the things that you need to do before the year is closed? Perfect. So Drew's going to walk us through what it looks like to actually, the checklist of things that you need to do before the year is over to prepare for tax time, payroll, the stuff that we do with our clients to make sure that they have all the boxes checked to have a good next year. So I'll pass it over to Drew to run it from here. And if you have any questions at any point, put them in the chat or click that Q&A button and we can answer those questions for you guys.
Yeah, thanks, Nate. Yeah, like Nate mentioned, please, as we're going through, utilize that Q&A box so that we can track all of those questions that pop up, and we'll have some time at the end where we can talk through some of those things specifically. If there's anything in your personal practice or your situation that you want to talk about, we want to make sure we carve out time to do that as well. So like Nate mentioned, we're shifting gears now. We'll touch back on some pricing here in a minute. But for the time being, we're going to talk about some year-end planning things from a financial standpoint that are important as a business owner. One major tax strategy that everyone has at their disposal, almost every DPC practice should be or is a cash paid taxpayer. And what that means is expenses are deductible when paid, and revenue is only revenue or taxable income when received, right? And so this allows some flexibility when you're getting close to the end of the year. A lot of people utilize this strategy to accelerate some things, right? So maybe you have some expenses that are due early January and you elect to go ahead and pay those right before the end of the year, right? It could be rent, it could be malpractice insurance, just a few examples, bonuses for employees, there's all sorts of things, right? And going ahead and paying those right at the end of the year allows you to receive the deduction for that specific item a year in advance, right? You will receive the tax benefit from that expense a year in advance. The same thing goes for collecting on membership fees, right? If there's any way that you can invoice for membership fees directly after the end of the year, right? If there's people that are going to be paying, say you have a new patient coming in and collecting their first fee, rather than at the end of December, you collect it in January. Or if you have any annual renewals around this time where people pay in full, right? Those are the big chunks. If you could push those to the first week of January, that will delay the tax impact of that revenue for a whole year. And so it's a very significant thing if you can kind of move some of those things around right at the end of the year and shift some of that tax burden down the line. The next step here in annualizing your year-end financial situation is payroll matters, right? So make sure that all salary adjustments are correct. Everything is set up properly for 1099s and W-2 filings, right, that are due at the end of January. That's usually a pretty tight turnaround, whether you're working with a CPA or you're self-preparing some of these forms, making sure that you have W-9s for vendors and things like that. Makes it a lot easier to prepare those 1099s rather than running around chasing folks that you've already previously paid in late January, right? Typically for 1099s, it's a best practice before you pay that vendor to request that W-9, right? While they still have skin in the game and they still are waiting on something from you, it's great to go ahead and receive that W-9 before paying them out as a best practice. But if you haven't done that, it's great to get it before the end of the year, as the first month of the next year can be pretty chaotic, and it cannot provide a lot of turnaround time since we only have 4 weeks to get those forms and to make those filings. While those filings are super simple, like 1099s, we just list the amount we paid the vendor, their name, and their employer identification number. They do come with some pretty severe penalties, right? So that's really what we're battling against in filing those on time, is to avoid those penalties and any missed deductions that can come from not filing those forms. Another major thing in the payroll category as a business owner is if you yourself are receiving some sort of health insurance, or you're paying some health insurance premiums for you and your family, making sure that in your payroll software that those are entered on your W-2 in box 14. That's vital. It can kind of cause problems with you down the line filing your tax return and then claiming the self-employed health insurance deduction, right? That's a deduction that's available for shareholders if you're an S corp of over 2%, right? Which most DPC owners are, as they're smaller practices owned by just 2 or 3 people. Getting those premiums on your W-2 is vital for receiving that deduction on your 1040. The last thing is just ensuring compliance. This is kind of a catch-all, but making sure all of your agreements are in place, reviewing your EHR, making sure it still serves you. If you're using Spruce or any client patient communication platforms, making sure that those are all dialed in and working for you, and analyzing any changes that are needed, and making sure you're up to date on all sorts of compliance items that you need to handle. Okay. So this slide kind of goes back to transparency with your patients, right? And the things that you're providing. So Nate had touched on briefly the price increase, and we've worked with a lot of clients in our outsourced CFO model. We've helped a lot of DPC practice implement these price increases who have never done a price increase. I worked with a physician this year. He's never once done a price increase the whole time that he's been in practice, so 5 years. And throughout that time, his margins have gotten tighter and tighter. And his question to us is like, why is that happening? And the answer is because he's paying more for lab fees, he's paying more for employees, he's paying more for benefits, he's paying more for everything, except for his patients aren't paying him more. And so it's his situation this year, starting in January, so January 1st, 2026, he's implementing a 3% increase. He's calling it an inflationary increase. You know, patients are used to paying more for eggs. They used to pay more for meat. They used to pay more for everything at the grocery store and everything else in their lives. So it makes sense that there would be an annual recurring inflationary increase. And that inflationary increase for him, at the size practice he's at, is going to result in an additional $50,000 in revenue for his business, right? And that should be something that's occurring every year. Now, you may be in a situation where you've never done a price increase, and you know, like, hey, I need to catch up more so than just an inflationary increase. I give you another example of a practice that I worked with this year on a price increase. He was very nervous about losing patients. When we first started working together, my ask to him was, what is your average price per member? And he was like, our pricing's on our website. You can go on our website and see. But when we really dug into it, his average price per member was about 60% of what his website pricing was. And the reason is whenever he first started his practice, he was trying to take on as many patients as possible and offering discounts left and right. And so we still had so many patients from that initial ramp up period that were paying far below his current pricing. And so we established a list of those patients and we increased them to the newly established fair market value pricing that was available to all new patients on his website. And in doing that, he was scared that he was going to lose a bunch of patients. And I know Nate gave the example of a 10% attrition. He lost 2 patients on a 500 patient panel, right? So he only lost 2 patients through the price increase. And so the really important thing surrounding price increases is messaging, right? How is this information presented, right? Like when you're doing a price increase, we highly recommend, you know, it's a very relational service, sending out an email communication in a newsletter type format, right? And you can even embed a video of yourself talking through the changes in the practice and the reasoning for the price increase. But that's really going to be vital to you long term, right? Your costs are increasing. Price increase are going to be a normal part of running your practice. Once your pricing is set, you can get by with just that annual inflationary increase, whether it's 3%, 5%, whatever you set or whatever makes sense to you. All doing that combined with our updated calculator every year, right? Which I know Nate mentioned will be available to you all. That calculator will show you in your area what makes the most sense. Like what can people in your area afford down to your city level. And that's specifically going to make it easier for you to swallow that price increase, right? Like you're not necessarily just price gouging your patients. This is the fair market value of your service in this area for you to build a sustainable business. And so again, when those price increases messaging is pushed out, having a clear understanding of the reasons and explaining that to your patients, and then also embedding some sort of video of yourself talking that kind of ties in that personal touch, right? It's the face they're used to seeing whenever they come into the practice, explaining this, not necessarily just reading it off of an email. One of the key things to include in that is emphasizing the value, right? For your patients that don't necessarily have a traditional health insurance, this model of utilizing DPC with a health share is far more economical. But with the price increase, it's also important to highlight how, what am I trying to say? How to highlight how the value they're receiving from you is so much more than they would get if they just went to see a primary care physician, right? If they went to see someone every time they were sick, they had to wait several days for an appointment, and then they had to, you know, sit in a waiting room for an hour, right? It wasn't a set thing, and then they had to deal with insurance and all of this billing stuff, right? So they have you, they know like they can message you in Spruce, or they can reach out to you if they have a question, text you. That type of patient care is what's vital in this situation, right? So emphasizing that patient care and how for you to continue to be able to provide that patient care in the current economy, these inflationary price increases are important. This slide is just talking through kind of like I stated previously, right? Being honest about the rising costs, right? As you continue to operate your business year over year, everything that you're paying for in your business is going to be more expensive, right? Supplies, staffing, tech costs, your EHR, all of those things are getting more expensive every year. And if you don't have these price increases set in place, like I mentioned about the doctor who had been operating for 5 years without a price increase, your margin is going to continually be squeezed. And so there's nothing wrong with providing that information to your patients, right? Not on a detailed level, but telling them, hey, this is the situation, this is the economy that we're in, right? I'm paying more for the inputs into this practice, and so I have to charge more to therefore make this a going concern. I know I gave the example of the practice where only 2 patients left from the price increase to the fair market value price. But that's not going to be the case in every situation, right? There's going to be some cancellations. There's going to be some normal healthy attrition. Some people are going to get angry at the price increases. A lot of times what I've seen in practices is the patients usually leave, and who are the most price conscious are also the very, very heavy utilizers, the people that are in the practice every single month, wanting to see the doctor because they're paying for the service, right? And so sometimes that type of attrition can be good, right? Because you as a business owner, whether you're looking to grow and expand and add new providers to your practice, whether those are mid tiers or whether that's another MD or DO, it's great because you need more time to be in that CEO role, right? As a business owner, you're doing far more than just simply seeing patients all day. You're a business owner, you have payroll to deal with, you're an HR manager, you have to deal with all of these things. You're dealing with marketing, right? And so you need more time to focus on those things. Those things should not necessarily be your responsibility outside of 8 to 5, right? And so having those high utilizers kind of phase out can make room for patients that are a better fit, right? Are better fit for the model or a better fit for your practice, and can also free up more time for you as you continue to grow as a business owner. Yeah, so this is just going back to clear communication with your patients, right? As you're increasing prices, we've had countless meetings with people, and we always push the price increase for the various reasons that we've discussed, right? It's almost always pushed back on. A lot of that is from what Nate said, right? It's a very personalized service, and there's almost imposter syndrome or fear of rejection, right? That like people are going to pay more to see me, and that's deep and that's psychological. But you are providing a very valuable service to your patients, right? And it's important for you to receive the fair market value of that service in your area. Um, but this can be handled with clear communication. Um, like we said, we like to give 30 to 60 days. I would say 60 days is usually far better. We usually recommend doing that the beginning of November, right? Sending out that communication, providing that 60 days for a January 1st price increase for patients. And that clear, open communication um, is important, right? It's also important to set that as a hard, fast standard, and you can apply that across the board and not allow room for these price negotiations, right? Where patients come back and they want to stay on their old rate or they're threatening to leave, right? We just got to make sure that this is a clear, consistent thing. Because if there's a patient that doesn't agree to your pricing, then it's important that we replace them with a patient who will agree to your pricing, right? The patients are out there, and so making sure that you have the right people as patients that are willing to pay for the value that DPC provides to them. And all of that comes back around for you long term to be able to provide and deliver the exceptional care sustainably, right? So that you can do that and you can have a profitable practice. It can make sense financially for you and your family. And for the model to work, that has to occur. The last thing I'll touch on before we'll get into any questions here is just an operational preparation checklist, right? These are just additional concerns at the end of the year for you to make sure that you're aware of before, you have the folks that come in who are trying to be healthier at the beginning of the year, who want to see their doctor more at the beginning of the year, be it from a place of New Year's resolution or whatever it may be, right? And so I'd say inventory and supply systems, making sure that you have the inventory on hand that you need, right? Ordering replacements, that also ties back into the tax strategy of accelerating some expenses, right? If you know that in January and February, you're going to need some more medical supplies on hand or anything like that, making sure that you have those items by the end of the year and going ahead and paying for those will help save you on taxes, but it'll also make sure you're prepared for Q1 of 2026. Scheduling strategically, right? I know that a lot of patients can try to see you right before the end of the year. If you're working in a situation where people have insurance and they have deductibles to deal with, they can want to see you and have things done before the end of the year. But also making sure you have the staff. I mentioned being an HR manager, dealing with holiday plans, and making sure that you have everyone on hand that you need to deal with those sorts of patient surges. The third thing is updating your documentation, right? Making any changes to your systems and processes to making sure you're HIPAA compliant, your policies, your consent documents, patient forms, and all of those sorts of things. Making sure that there's no changes or holes in those forms that need to be dealt with. And the last thing is investing in your team, right? It's so easy to get lost in serving patients. But as a business owner, you also have to make sure you're constantly seeking improvement from your employees. You're doing employee reviews, compensation, adjustments as deserved and as earned, helping them improve their skills and where they're at in their career, but also setting goals, right? If there's certain things that you've seen from your team that you want to see different, this is a great time to have those meetings and set those goals for 2026. This last thing is just a quick IMA, right? Implement, monitor, and adjust, right? So with updating your systems, right, making sure that everything is rolling well with your marketing materials, your billing software, and your pricing. The real important thing that's really going to kind of play into all of these is making sure that you're evaluating early and often, right? If we're tracking responses, right, and monitoring cancellations and new signups, right, we want to make sure that that's happening, right, and that we're not having attrition that's going out of control, because that may mean that we need to shift some of our value proposition and some of our marketing communications and what we're putting out to make sure that that's all consistent with what patients want to see, right? And there may be a disconnect there, but not letting that run for 3 or 4 or 5 months, right? If we're analyzing that stuff on a every 1 to 2 months, then we can kind of course correct, right, and stay on the path and make sure we have happy and healthy patients. I would encourage you to elicit feedback from your patients. That's not just from you, right? Say you're the only provider in your practice seeing patients. They also interact with your medical assistants. They interact with your receptionists, right? So gathering feedback from them on the overall experience. That also goes to price increases, right? You can gather feedback in real time as you're seeing patients on the price increase and seeing how it's being received across the board. In the very least, I would recommend analyzing all of this stuff at the end of the first quarter, right? Depending on if you're meeting with a CPA monthly or somebody else is involved in your financial situation, or if you're kind of DIY in this, you need to make sure that you're analyzing all this stuff, if not monthly, at least quarterly. Hold on, sorry. At the end of the day, the real important thing here is to make sure we're setting a budget, right? That's helping us plan whether you want to add another provider, whether you're knowing, hey, can I even afford to pre-purchase medical supplies to save on taxes? In those situations, without a proper budget, it's hard to understand what cash flow is going to be in 3 to 6 months, right? And so tracking that is very important. Tracking what you think your additional signups are going to be every month, right? You can do that based on historical. You can do that based on future projected. But at the end of the day, as you're tracking that, it's important to go back and look, whether it's at the end of the month or the end of the quarter, to say how close were we to that target and what kept us from that target, right? That is what a budget is for, right? A budget is only so good if you're not comparing the actual data to it, seeing where the holes are, course correcting, and then making those changes for the subsequent quarters and months throughout 2026. At the end of the day, our goal here is just to help DPC practices build sustainable practices, right? Financially sustainable practices. Our goal here at Goodman CPA is to help DPC owners achieve their God-given purpose, right? And the idea of that is, hey, we want to free up any financial stressors or any financial concerns so that you can focus on providing the personalized care that really sets DPC apart, and that you can do so with confidence and really focus on the things that you set out to do when you started your practice in the first place. So I think that's it from us. I want to see if there's any questions that we have. Let's see. Doesn't like anybody's added any questions. If there's anything you guys have, feel free to come off of mute and to ask that question, or you can type it in the Q&A. I'll give a few minutes for you guys to do that. Otherwise, I appreciate the time to take, guys. And if anything comes up, you're more than welcome to reach out to me or Nate. Our email addresses will be in the follow-up. If anything comes up, feel free to reach out. I appreciate the time. Rob, if you do have a question, you can put it in the chat here. I'm not sure what's going on with the Q&A, if there's an issue with that. Of course, Sue-Ann. Yeah, so Stephanie, if you're looking to start your practice in 2026, I guess my follow-up question to that was, are you launching your practice in January of 2026 or later? It's a little different if you're thinking about launching your practice, because all of those will be caught up in what's known as startup expenses. So the IRS is going to put all of those in a category that we can only deduct about 5,000 of up front, and the rest will be amortized over the life. So if there's certain expenses that can be held off on until you open your practice, that's great. If not, they'll just be caught in that category that's limited to that 5,000. But if you're starting your practice in 2026, that whole year-end planning for expenses doesn't necessarily apply in the same way. I'm happy to talk to you about that one-on-one if that would be helpful. Okay. All right, see, we got some questions coming in. Let's see, Rob. Rob asked, will a DPC be an eligible expense under Section 179 after the first of the year? I agree that could help raise prices. That was up in the air the last I saw. I'll have to look back and get you an answer on that directly, Rob. If you want to, Rob, if you want to put your or reach out to us directly, I'm happy to get you that answer after the call. Perfect. Thanks, Rob. Well, if there's no other questions, guys, again, we'll have our emails in the follow-up with all these resources. Feel free to get into the pricing calculator and play around. We're happy to have conversations too. Yeah, Rob, I'll give you my phone number right here. Yeah, there's my phone number, Rob. If you guys or anybody needs to call and chat about anything one-on-one, I'm happy to do that with you all. But in the meantime, if there's any additional questions that come up, feel free to reach out through this phone number or through our email, and we're happy to get back with you. Thanks all.